financial and economic system of the world we live in is quite fragile.
And Argentina's capital is filled with homeless people. It's a snapshot of an economic crisis that's getting worse.
Now, while the UK is struggling to get inflation under control, China's economy is suffering from the opposite, deflation.
One outspoken US economist is predicting the biggest market crash in our lifetime. Yay!
The UK has fallen into its largest recession on record.
In the US, where some of the world's leading money managers are warning the collapse of another American bank could lead to a credit crunch and an economic slowdown.
Economist Harry Dent is making a dire prediction about the market next year. He says 2024 is going to bring, and I'm quoting him now, the biggest crash of our lifetime.
It doesn't work well when we all freak out at the same time. So we all need to somehow maintain a sense of stability and security for it to operate as usual. Entire economies are based on us keeping our money in the bank and not freaking out. But what would really happen if all of us just freaked out? Alright, what's the first thing that comes to mind when I say the word banks? It's a place where we all store our money. We give our hard-earned income to a banking institution. They take that money and store it in a giant vault, similar to the ones that we see in the series Money Heist. Quite literally. And when we need it, we just ask for it and they give it to us immediately. But that's not how it really is. So, if I put $1,000 into the bank account right now, the bank only needs to save 10% of it inside the big vault. So like $100. The other 90% is put into bank investments. They take $900 and invest it into something, which they can make money on, like giving loans to people like you. Maybe because you need to change your car tires or something, so you can take that money with a promise to give it back with an extra fee. That's what we call interest. Let's say that the interest is at 10%, so the amount you promise to pay back is $990 instead of the $900 only. The bank makes a $90 profit, which they give me a small portion of as a thanks for letting me use your money for some time. This whole system is called fractional reserve banking. So as we speak, your bank only has 10% of your balance as cash. The rest is with some random guy that you don't even know, maybe helping him buy some new car tires. Mind-blowing, right? Now imagine that there are millions of people like you with larger amounts. They all go through the same reserve banking system and keep the banks and economy running. Now, what do you think would happen if all of these million people with you and your $1,000 decided to pull your money out of these banks all at once?
In just 24 hours, markets will reopen and rattled investors are going to start to assess the fallout of the second largest bank collapse in U.S. history. Silicon Valley Bank is now under the control of the FDIC after panic among its customers set off a bank run.
Okay. Let's start with a scenario where 500,000 people do. That's 500,000 potential individual investments lost. But that's not even the biggest concern for the banks.
In many respects, what we're living through today is a very traditional bank run.
A bank run is literally the worst case scenario. Remember the 10% ratio that the banks keep in their vaults? Perfect.
This is the traditional way that banks work. They hold some money aside for daily liquidity, but traditionally very small percentage of the deposits actually go out of the bank each day. But when a bank is perceived to have lost confidence with its customers want to get their money out of a bank, out of a financial institution.
Since banks lend out 90% of the money, they do not have enough liquid cash to give back to all of the depositors at once. This leads to a liquidity crisis. Now the bank needs to look for an emergency fund to give back to all of these angry customers. They can call the central bank for support. The central bank then provides liquidity through short-term loans. There are also government insurance programs whose main purpose is to protect depositors' money in the event of bank failure, up to a certain amount, like the Federal Deposit Insurance Corporation, FDIC. Now, fortunately for you, and unfortunately for the banks, I guess, we live in a world where we are more connected than ever. A bank run happening in one bank can spread fear to many banks, leading depositors to withdraw their funds from other financial institutions, which of course will lead to more bank runs, and so on and so forth until we actually get to a financial crisis, where individuals lose their faith and trust in banks, leading to serious economic downturns. Historically, bank runs were more common before the establishment of strong central banking system and deposit insurance. Modern financial systems have several safeguards in place to prevent such things from happening, but the fundamental issue remains that if everybody freaks out and demands their money all at the same time, the banks will not have enough cash on hand to meet them demands. See you soon.